everyone, welcome to our stock investing channel. So today we'll be sharing with you about the Hong Kong market again. So as many may have noticed, right, for the past week, okay, the Hong Kong stock market, or rather the China stock market, was disastrous. Everything just broke down. So as of Friday, 11 March 2022, so over the week, Seng Index actually dropped around 3.54%. Okay, from the highs to the lowest, okay, it's about 5.32%. Okay, so that's quite a big drop. And year to date is actually down about 11% already. So now people may be wondering, is it time to actually start buying? Okay, so hopefully you will have some idea after today's video. So now you all might be wondering what had caused this sell-off for the week or for Friday. Okay, for the sell-off for the week is, I can say it's mainly due to the geopolitical conflict and the increasing oil price. Okay, and later to the week, right, it's actually caused by regulatory uncertainties. So okay, on Thursday, 10th of March, right? Okay, 10th of March, with companies such as HSTECH Beijing, okay, HSTECH Beijing and HSI Lab. Okay, these companies were actually warned by SEC for delisting if they don't comply with the 2020 Foreign Companies Accountable Act, okay, which requires ADRs listed in American exchanges to allow U.S. inspectors to review the audit logs. So this actually causes some delisting risk again. So actually Jeffrey said that the delisting was not something new. In fact, right, it's already been around for the past 1 or 2 years. Okay, but this delisting announcement by the SEC, okay, actually give the market another excuse to actually sell off. Okay, and it's actually, okay, we don't really know, okay, whether it's really due to SEC or is it due to geopolitical conflict between Russia and Ukraine. So any bad news from now on that comes to the market, right, will actually just trigger a sell-off with some reason for people to short. Okay, so shortly after the SEC announcement, right, the China Securities Regulatory Commission, the CSRC, actually issued a statement over WeChat, okay, saying that okay, we respect, okay, overseas regulators' effort to strengthen supervision. If I'm not wrong, it's somewhere here. Give me a second. Sorry about this. Yeah, here. Okay, we respect overseas regulators' effort to strengthen, okay, supervision over accounting companies, okay, to improve the quality of financial information of listed companies, okay, but firmly oppose, okay, the wrong practice of some forces, okay, politicizing, okay, securities regulation. Okay, so actually okay, the CSRC actually issued a statement over Weibo, which I can see is as a good thing, as a positive thing. Okay, which means that the Chinese government, okay, is actually is agreeing with what the SEC is actually doing its effort for more transparent, better accounting, for these companies, which will in turn benefit all the investors, which provide us better financial information of the listed companies. However, there are also against, if they use this as an excuse to actually politicize, like politicize things, as over the years, China and U.S. They are not having the best relationship with each other. Yeah. So yeah, who knows? Hopefully it progresses well. So also on Friday, right, or during the week, or Thursday, one of the more prominent listing case will be our DD Global. DD Global actually tumbled, I think, as much as 44% on Friday. Due to a Bloomberg report from a known source. That the company actually suspend preparation to shift its listing to Hong Kong. So currently the share price for DD is under $2. I think about $1.60 something cents. So not sure whether it's a good price to actually enter. Don't know whether there will be any offerings during the delisting and what are the pricing. So maybe there's some bargain for the current price. So in this same article, right, a series. They also say that a series of Chinese state-owned companies, including Semicon Manufacturing International, China Val, CNLC, they had already been kicked out of NYSE since last year, due to military link under a different regulation. So yeah, this emphasizes that this is nothing new, right? Nothing new. So probably this is just an excuse for short sellers or sellers to actually come and short the price, bring the price lower, so people can actually slowly collect stocks at a lower price, before pumping it up again when everything becomes when there are more uncertainties in the stock market. So also I saw another article about Hang Seng slumping to 68-month closing low. So Hang Seng Index on Friday dropped as much as 3.9%. Hang Seng Tech dropped as much as 9% during its session. And actually this index end up closing down at 1.6% and 4.28% respectively. And Hang Seng actually closes at its 5.5 years low now on Friday. So the sell-off at the start of the day was quite scary, was down as much as 3.9% on Hang Seng Index and 9% for Hang Seng Tech. So it's a lot. You can see for that day, all the big techs, they basically, and most of the stocks in the index, except maybe the commodity stocks, they were actually down by a lot. But at the later part of the days, much of the losses are actually recovered. So probably due to some positivity from agreement between China and U.S. regulators over securities supervision. So the SEC naming, as we look down, okay, down. You see, companies on the SEC led the stump. Okay, so Yum China, Zai Hutch, Met, Beijing drop a lot. So SEC naming of firms added to pressure on already shaky Chinese equity market. Ruling from factors including economic concerns. The Ukraine conflict and the announcement this week by Norway's sovereign funds that it was excluding Chinese sportswear maker leaning over human rights concerns. So you see, all of these actually emphasize on so much uncertainties in the Chinese market right now. Okay, so so the renewed regulatory uncertainty usually dampens investor sentiments, I believe, and this causes many investors to actually panic sell. So probably if Ukraine ceasefire breaks down, or oil price climbing up, or more SEC concerns, there can be more selling. It's quite sad. Yeah, quite sad for the Hong Kong market. Currently, the selling is actually accelerating again. Okay, it's actually accelerating again. Yes, the keyword is again. You see also from Chinese Post, the way they write the articles were actually the same as like American sources, like U.S. sources. Nikkei Asia, I believe it's from Japan. All the sources say the same thing. It's all pretty bad. Yeah. Okay, so let's take a look at the technical side of things. So you see, over the past week. Okay, previously you were saying that the stock was actually trading within this channel. Okay, and whether it will bounce off this channel or it will break down. Okay, it ended up. Okay, we broke down. We broke down. Yes. So now you may be wondering where's the stock actually targeting right now. Okay, so yeah, later I'll share with you a bit more. You see, for Hang Seng Tech also broke down. Okay, we can actually take a look. We can actually take a look at the indices. Okay, this Hang Seng Tech. So for Hang Seng Tech, right, if you were to look at the components, see JD.com down 11%, which was quite crazy. It is probably due to their revenue growth slowing down. Okay, that you see Country Garden down 7%, Meituan. You see mostly the big names. Okay, JD, Meituan, Baba, okay, all down like 5-6%, 11%, 4%. So it's actually very, very big losses. Okay, even oil names, okay, such as CNNOC also dropped. See, basically everyone, okay, all the stocks were slaughtered, okay, quite badly, except some banks, okay, ICBCs, HSTECH, Hang Seng Bank, okay, Link REIT, wow, okay, it's a dividend company, okay, then Nongfu Spring, okay, AIA, and Hong Kong Exchange. Okay, so basically, right, gains were quite small, but the losses were crazy. Okay, I can say that if we were to take a look at the sectors, right, okay, the worst performing one would be for the week. Okay, let's take a look. The worst performing one for the week, okay, will be health services, okay, consumers, non-durable, okay, technology, okay, transportation, okay, as expected due to oil price. Okay, and the more defensive sectors such as communications and utilities, okay, were actually one of the better performing ones. So you can see the market as it is a risk-off market right now. Yeah. So it's important to diversify, not all in, okay, for like all these high growth sectors. Okay. So let's take a look at the Hang Seng Tech. Look at how it's like. Okay, it went down, okay, at the start of the day. Okay, so after lunch it started climbing up. Okay, breaking the opening of the day, which can still be seen as something bullish. Huh. So maybe the support came in here, and maybe there may be a continuation to this. So we can take a look at all these, okay, the components. Okay, GDS drop, okay, 13%, JD, Bilibili, okay, quite show. Okay, so basically everything, right? Almost everything except 3 companies were actually down for the Hang Seng Tech. So it's actually very disastrous. So when I was looking at JD.com, right, wow, the US side, okay, and the Hong Kong side, okay, both dropped quite significantly, double-digit drop. So I take a look. Personally, I feel that the Hong Kong, okay, or JD.com, right, okay, poses a quarterly loss, okay, due to cost increase and revenue growth. Ultimately, I see okay, that JD is still one of the better e-commerce company in China. So don't know whether this is a buying opportunity. So I'll be doing more analysis on this for myself, or maybe I'll post a video on my analysis on JD.com, and we'll see how things goes now. Right? Okay. So we can take a look at the charts. So for Hang Seng Index, okay, let's begin with this. So previously it was trading in this blue channel on a slow downtrend, okay, until last week. Okay, this week it broke down. So you might be wondering where could it be heading to. So actually I draw a straight line, a vertical line from the top of the channel to the bottom of the channel. Can I copy it down? Okay, and I can draw this channel lah. This may be the new channel that the stock will be following. Okay, so ultimately, okay, for now, okay, the Hang Seng Index don't see any sign of life lah. So probably it will start a slow decline again, okay, for a couple more months, maybe until the end of the year. Then when things becomes more settled down, okay, then eventually if it hits the long-term trend line, okay, the long-term yellow trend line, okay, then it can start recovering. That's the ideal scenario. So what I would recommend to do if you are still bullish with the Hong Kong stock market, it will be you can probably do a dollar cost averaging. Okay, buying a few $1,000s worth of Hang Seng ETF, okay, every week or every 2 weeks or every month, okay, for maybe until the end of the year lah, and see whether it rebound. Okay, I wouldn't recommend okay, a one-off or a big position right now. So because I have no idea whether it will actually continue to go down to about 17,000, okay, which is quite a significant drop. If you see okay, from the highs last year, okay, all the way down to 17,000. Okay, it's actually a 45% drop. Okay, this number may seem very daunting, right? Okay, or scary, right? Okay, but okay, to be honest, this is actually nothing. You see, so over the years, right, okay, this kind of 30-40% drop okay, is actually quite common for this stock. Okay, this is a 26% drop. Okay, 26% drop in 2018, right? And you can see this drop again. And this bear market right here. It's how much? 36%, 35-36%. So it's actually something quite normal for the Hang Seng Index. But what we can learn from this is, okay, if history actually speaks for itself, right? Okay, we will be heading here. And hopefully when it touches here, it starts a sharp rebound. Okay, a sharp rebound of the index. Okay, back to its previous high. Okay, or new highs again. That's the ideal scenario. So if we were to look at the Hang Seng Index, right, I use the same strategy. Draw a horizontal line down, vertical line down, and I extrapolate and draw a parallel line. We copy this line and paste here. So you see, the Hang Seng Index actually rebound off the bottom of the channel very strongly. So maybe there is some degree of accuracy over here. This is what the big boys actually want to do. Okay, they want this new channel instead of the old channel. So probably there will be a rebound, hopefully back to the top of the channel. And it will start to ding dong, 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 all the way down. Until the market starts to be bullish again. So the strategy for Hang Seng Tech Index can still be dollar cost averaging. So personally, right, I'm still bullish for the Hang Seng, for the Hong Kong market, for the for a 5 years horizon. Personally, I will be building my position now. Actually, I started building my position around 2.3k. 2.3k. This was what I did now. Actually, what I did was that I thought that the index had bottom here. It had bottom here. So over these 2 months, right, 2 to 3 months, I had been building my position. Build. And it started going up. Okay. So I added here, somewhere here, somewhere here, somewhere here, and somewhere here. Okay. So I thought there will be breakout here. Okay. So the moment it actually broke down here, I was quite wary. I'm not sure whether it will continue breaking down. Okay, so I unloaded half of my positions here. Because it higher high, higher low, higher high, lower low. So this trend we had broken. Okay, so what I did was unload half of here, half over here, because I was not sure whether the stock will continue to drop. Okay, but some people might say that it's a stupid decision. Okay, because this can be uh, a longer time frame higher low. Okay, then I was quite I regretted my decision when it started rebounding. The next week. However, the moment I saw that it started to break down and it broke below my selling point, I also exited my position entirely. So it went down all the way until now. So probably I will give this another week or two. Before I start dollar cost averaging into the positions again. Hopefully, we will dollar cost average all the way until the new bottom, or the dollar cost average at these a new gradual downtrend and wait for it to rebound. I expect 2024 or 2023 to be a good year for the Chinese market. Yeah. Thank you for watching my video. Sorry for my presentation. I know that I'm not a very good presenter. For I bring things everywhere, and I'm still learning on how to present better. So hopefully over the next few months, I'll be a better presenter and you all will like my videos more. So if you want more information, more of my opinions, right? Please like and subscribe to my channel. Pardon my voice, because I just recovered from COVID-19. I just recovered from COVID, so I'm still having a hot phlegm in my throat. So I sounded funny, I believe. Yep. So for those who listen all the way, thank you. Thanks a lot. Thanks for supporting my channel. Goodbye. Have a good trading week ahead. Thank you.